So our stock analysis for this report is going to be Ford versus GM. When looking at both companies, we could see that the major shareholders consist of Vanguard, Oppenheimer, Franklin, huge banks like JP Morgan. They both share same commonalities when it comes to major shareholders. So cost of capital is important because it tells you how much a company's debt and equity has. So when looking at Ford and GM, you could see that GM recently just got out of a bankruptcy, meaning that they obviously have more equity compared to debt. And when you're looking at Ford, they have a little more debt to equity, but they are more capable of taking in more debt compared to GM. So if we had to pick one, we would go with Ford.
Cost of debt is the rate at which a company can pay on its current debt. It is measured before and after tax returns, yet we see after tax returns used the most due to different factors, which are the marginal tax rate a company can have and the tax deductions they have. Ford has a 2.09 cost of debt, while GM has a cost of debt of 1.09. This is seen because GM just got out of a bankruptcy and Ford can take on more debt than GM can.
For number 4, what we did first was find the 10-year treasury that was used to calculate the risk-free rate. And then we also found the 5-year. We ran a regressional analysis for both Ford and GM, and also found the 2-year, which is the weekly prices as when the stock closed. After running the regression, we noticed that when it's at a shorter term, the price of the stock or the regression is having a lower beta compared to the 5-year monthly return of the stock has a higher regression due to the higher volatility within that time span. And we're looking at Ford versus GM. Ford has a smaller beta compared to GM because Ford is shown to be less risky compared to the market. The weighted average cost of capital for GM is 8.13, which is significantly higher than Ford due to the high cost of equity it has in comparison to Ford.
Both GM and Ford have a similar capital structure with a 5% equity risk premium. Both would benefit from a lower capital structure that would decrease the risk for shareholders.
Both Ford and GM can benefit from the financial restructuring, but when comparing the both of them, Ford will probably benefit the most as it hasn't reached its optimal level, and by increasing the financial restructuring of the company, it would give it more value. When looking at both companies, you could say that debt is a benefit as it is less regulated and will increase the value of the company as well as it being a tax deduction. But the negative side is that there is a chance of default, and since GM just got out of bankruptcy, you could say they defaulted due to the high debt amount, but currently it has more equity and could probably take in more debt as comparison to Ford.
When comparing Ford and GM to its competitors Honda and Toyota, we can see that Honda and Toyota have a much larger amount of total assets and total liabilities, as well as their stock price and a larger P/E ratio than what GM and Ford have.
When looking at both stocks, Ford and GM are both overvalued, but Ford is only slightly overvalued.
So overall, we chose Ford over GM.